Tesla just announced seriously high deliveries of vehicles in Q2 of 2020. This means that it's very possible that Tesla will have 4 consecutive quarters with a net profit. And a lot of people are saying this will make them join the S&P 500, the largest ETF in the world, sitting at $28.1 trillion in market cap. Things are actually a lot more complicated than that. To start off, what is an ETF and why is the S&P 500 so important for Tesla to join? An ETF is an exchange-traded fund. It's a collection of assets bundled into a single unit. You can oftentimes trade them like a stock, but generally trading indexes is a little different, and they contain a lot of assets. Some ETFs have international stocks, some are US only, others use things like bonds. There's an ETF for almost any collection of securities you can imagine. To put it very crudely, buying a share of an ETF is sort of like buying a bunch of stocks jammed into one. Some are private and others are freely available. What you might see often discussed when people are talking about the S&P 500 is SPY, which is technically a trust, but people like it because you can trade it back and forth like a stock. The S&P 500 is an ETF that measures the performance of 500 large companies listed on stock exchanges in the US. That sounds a little weird, right? 500 large companies, not the largest company. We'll get back to this. The S&P 500 is the largest and most followed ETF in the world. It is often considered to be the best way to track the health and performance of the US stock market. Being on the S&P 500 is a huge deal, and it means that the index needs shares of your stock. ETFs dramatically shift the value of a stock. Michael Burry, who famously made himself a fortune by shorting the US housing market in 2008 and was portrayed in the film The Big Short, is one of the biggest proponents of the ETF bubble. The idea that so many people and institutions are dumping money into ETFs that the underlying stocks that they actually track become incredibly overvalued. It makes sense. ETFs are popular because they allow an investor to have a diversified, wide-reaching, and rich portfolio by owning a single security. They're hugely popular, and we've seen the continued rise of ETFs. Now, will this bubble pop, and will it pop anytime soon? I don't necessarily think so. ETFs are popular, and without a doubt they pump up the underlying securities, but is every institution and personal investor going to dump them in favor of making their own portfolios without any ETFs? That's something I'm doubtful of. Now let's talk about Tesla joining the S&P 500. It's probably starting to make a bit more sense. If Tesla ends up becoming part of the S&P 500, the largest ETF in the world, its price will skyrocket like never before. If you own Tesla stock before it's on the S&P 500, you'll make yourself a lot of money. The underlying funding from the S&P will not only pump prices, but it will help solidify the company. Today, there are a lot of Tesla doubters. It's the most shorted company in the world. Joining the S&P 500 will dramatically reshape how a lot of people view it. It will be incredibly difficult not to feed Tesla money, since there are so many ETFs based off the S&P 500 or that track it some way. Investing in the stock market without funding Tesla will become a lot more difficult. Now, everyone is saying that Tesla just needs to show a profit this quarter to join the S&P 500. This isn't exactly true. There's a whole set of rules. You can look them up yourself. The section we care about most is a little farther down. The eligibility criteria on Section 6. As you can see, there's a lot that goes into this. Where they're based, the exchange listing, organization structure and share types, tracking stocks and multiple share classes. Now, you might be saying, 40 ounce, I don't want to read all this complex lawyer speak, I just want a simple explanation. Well, there's a lot of great articles out there explaining things in simpler terms. This article by Greg McFarlane is pretty well laid out in my opinion. His bullet points do a pretty good job of summarizing things. Let's go through them for Tesla. Tesla far exceeds the market cap requirement. Tesla is a US-based company and is headquartered in the US. Tesla shares sell like crazy, and maybe a little too crazy for some people. Most of its shares in the public hands is a big one. No, the S&P leadership will not allow a company to hold all of its shares and then force them to buy it at a premium, just in case you had any ideas of gaming the system. This percentage, float held by institutions. Float is the amount of shares actually available for trading. At over 70% by institutions and not an insider, we're probably in the clear, but the S&P might have differing definitions or technicalities buried in supporting documents. At least a year since the IPO? Yep. And the big one everyone is talking about, the sum of the previous 4 quarters of earnings must be positive, as well as the most recent quarter. If Tesla shows a profit this quarter, then it does look like they're eligible to join. And that is the big asterisk that seems to be forgotten by a lot of people. Eligible. Remember how I said the S&P 500 tracks 500 large US companies, not the 500 largest? Well, these rules are simply for eligibility. The S&P 500 isn't exactly a government-made ETF or open source community. I'm not sure if either of those actually exist. It was created and is maintained by a company. These guys, the S&P Dow Jones Indices, which is owned by S&P Global. And this company uses a committee to select companies that will make it to the S&P 500. There are some ETFs that are 100% rule-based, like the Russell 1000, where if the rules are met, it's in, but the S&P 500 is not like that. The S&P 500 committee could reject Tesla. Things are shifting. Tons of American petroleum companies tanked in value and are not earning a profit right now. Could you imagine the optics if big American oil was axed from the largest ETF ever for Tesla? It's hard to say what politics exist on the committee and what companies might do to try to stop Tesla from joining it. This could very well be a turning point for the petroleum industry, really. And that's something to keep in mind. Tesla could be selected and go to the moon, but Tesla could also be rejected and possibly go down a little or stagnate for a while if it's clear they won't be admitted. This is very hard to judge, and it's a judgment call you have to make. But just keep in mind, this is a company. It is not a set of rules that automatically add companies in. It's not a program. It is people who can be manipulated, paid off, or just have very strong opinions that sometimes might not be justified. It's all things to consider before you just instantly say, Tesla's going to the S&P 500. They're going to be the biggest company ever. I have a lot of faith in Tesla, but keep in mind, there are some really nasty people and companies trying to prevent Tesla from succeeding.